Hello, good morning, everyone. Yes, we are live now. Good morning. If you can hear me and see me, please send a yes in the chat box if you can see me and if you can hear me clearly. Good morning, Ananta. Good morning, Abhishek, Kartike, Jyoti, Payal, Mansi, Jyotish, Kirti, Vivek. Make my status. What a good name. Make my status. Megha Tomar, Aditi Kumari, Yash, Srinidhi, Sharan. Abhishek thinks. Good morning, everyone. Vandana, Sarthak, Anand, Vivek. Good morning. Yes, good morning, guys. And yes, welcome to this session of the direct taxation. And yes, we are going through the entire syllabus of direct taxation. As of now, our exams are scheduled in June 2022. And yes, we are determined to attain good marks in direct taxation. And yes, all the chapters of direct taxation will be covered in this particular marathon. We have already covered more than 60% of our syllabus, guys. More than 60% of the syllabus is already covered in this entire marathon lectures. If you have not watched the other marathon lectures, the earlier marathon lectures, please go on to the YouTube channel and watch all the marathon lectures. It will be really useful to all of you. The best part about this marathon is that it is strictly based on the syllabus which is prescribed by the Institute of Cost Accountants of India. Hence, very relevant to CMA students. Guys, we have seen that in section C, the third section of your examination, some questions come from your study mat as it is, okay? And of course, it's a fact that your entire paper will revolve around your study mat. So covering your study mat is the first and foremost requirement for not only direct taxes, but any other subject, all other subjects. The first and foremost requirement is to cover the study material. And that is what we are going to do over here as well. We are covering your study material. We are covering the study material as prescribed by the Institute of Cost Accountants of India in each of the chapters which we are discussing in this particular marathon lectures. So yes, welcome everyone in this particular session of a very important chapter of your syllabus. The name of the chapter is Set Off and Carry Forward of Losses. Set Off and Carry Forward of Losses. The name of the chapter is Set Off and Carry Forward of Losses. So there are two things which are there in this particular chapter which I'm going to discuss. Number one, set off of losses. Number two, carry forward of losses. So there are two things which we are going to discuss. Number one, set off of losses. Number two, carry forward of losses. These are the two things which we are going to deal with in this particular chapter. Set off of losses. Second, carry forward of losses. Now, what do you mean by set off of losses? So guys, a particular person may earn income from various heads during a particular year. Let me take you back to the first class, the basics class, which we had studied, and the starting of our syllabus, basic concepts class, okay? We had discussed that there are 5 heads of income: salary, house property, PGBP, capital gain, and income from other sources. We have 5 heads of income. This is what is our initial understanding while we were discussing basic concepts chapter. Now, these 5 heads of income will yield some income and or some loss. In some of the head, there can be losses as well, where expenses are more than the income. If income are more than the expenses, then it will be profit. If expenses are more and income is less, then it will be losses. So there might be losses, there might be profits in each of these 5 heads of income. So guys, it's not necessary that a person is earning income from all the heads, but yes, permutation combination can happen. For example, a person can earn income from house property and income from other sources. Or there's another person who's earning income from PGBP and income from capital gain. There might be another person who's earning income from salary as well as earning income from capital gain. So there can be various permutation and combinations. It is not necessary that a person will earn income from all these sources. There can be situations as well where a person is earning income only from one particular source. That is also a possibility. So any kind of eventuality is covered under this particular computation. So ultimately, we are going to get to GTI, gross total income. Now, one very important benefit of losses is that it will reduce our GTI and hence it will reduce our taxes. it will reduce our GTI, and hence it will reduce our taxes. And therefore, special emphasis is to be given on losses. So yes, losses can arise in any of these heads. Losses can arise in any of these heads. Of course, in salary chapter, there is no possibility that losses can arise. But apart from salary, all other heads of income can have losses. And guys, those losses are very, very beneficial to the assessee. Why? Because it can reduce the gross total income. So if you have losses in PGBP and you have income in capital gain, it will be a wonderful situation, guys. We will set it off. This is known as setting off. Setting off means adjustment, adjusting. Setting off means adjusting. We will adjust the profits of one head from the losses of another head, and thereby reducing our gross total income. And therefore, we say that losses are very, very good from a tax perspective. Losses will reduce our gross total income. And since losses will reduce our gross total income, it will be very, very, very beneficial to us, because we will be required to pay lesser amount of taxes if gross total income is reduced. And that is how the losses benefit us. Now, income tax authorities have made certain rules regarding the set off of losses. And in this particular chapter, we are going to study all those rules which are surrounding the set off of losses. What do you mean by set off? First of all, set off means adjustment. Adjustment means setting off. Set off means adjustment, adjusting losses from profit. That is known as set off. Now, let's first talk about set off. And in the second half of the lecture, we'll talk about carry forward. What do you mean by carry forward? We'll discuss in the second half of the lecture. First, let's discuss about what do you mean by set off. Guys, set off means adjusting of loss from one head to profit of another head. This adjustment is known as set off. Now, set off can happen at two levels. Set off can happen at two levels. Before coming on to those two levels, let me get you back to basic concepts chapter, where I had discussed the difference between heads of income and sources of income. There are two things: heads of income and sources of income. Heads of income are these five: salary, house property, PGBP, capital gain, income from other sources. These are five heads of income. And within these heads, there can be various sources of income. For example, capital gain can arise from sale of two assets: capital gain 1, capital gain 2. House property income can arise from two house properties: house property 1, house property 2. Business income can arise from two businesses: business 1, business 2, business 3, business 4, so on and so forth. So, within the head, if you have multiple sources of income, then they are known as sources of income. And this is known as heads of income. This is known as sources of income. So sources of income is a subset of heads of income. Heads of income is the main thing, and sources of income is a subset of heads of income. That is how I can best explain or define difference between heads of income and sources of income. So guys, assume that I have two businesses. I take coaching classes. That is my first business. I also provide consultancy to some MNCs, to some corporate firms regarding their direct taxation profiles. I have two businesses: coaching, number two, consultancy. Now, suppose my coaching business is running into profits and my consultancy business is running into losses. Then the first set off that I would expect from Government of India is to set off this loss from this profit. First set off that I would expect from Government of India is that it would allow me to set off my business 2 loss from my business 1 income. I should be allowed this set off. So suppose I have income of 2 lakh rupees from my coaching business. I have income of 2 lakh rupees from my coaching business. Sir, why are you lying? We know that your income is much higher than 2 lakh rupees. Guys, it's just an example, okay? It's just an example. Don't get emotional about it. Suppose my coaching business is earning me a revenue of 2 lakh rupees, a profit of 2 lakh rupees, and my business losses 0.50 lakhs, which means 50,000 rupees is the business 2 loss. So guys, instead of paying taxes on 2 lakh rupees, I should first be allowed a set off, and I should ideally pay taxes on only 1.5 lakh rupees. That is the ideal expectation which I have from Government of India, from the Income Tax Authority. This is known as setting off of losses from profits. This is known as set off of losses. So guys, now let me extend my income to also house property. Suppose I also have a house property. Okay. Suppose I have a house property and I have only one house property. I have a house property and I have only one house property, and that house property is yielding me a loss of 1 lakh rupees. That house property is yielding me a loss of 1 lakh rupees. So, how can house property income be a loss? Please answer in the WhatsApp group. Please answer in the WhatsApp group. How can house property income be a loss? Under what circumstances can house property income be a loss? Please answer in the WhatsApp group. Abhishek is saying that please discuss MTP. Yes, sure, guys, sure. Within the coming week, I will solve the entire MTP in front of you. So that will be done. Yes, that is there in my to-do list. Okay, please tell me, how would the income from house property be a loss? Under what circumstances can house property income yield to a loss? Perfect. Jyotish Raj is perfect. Interest on loan can be higher than the income, because interest on loan is provided to an unlimited extent if the property is let out. So if interest on loan is higher than the income, then it will lead to loss. So guys, in this case, I have a loss from house property, right? I have two businesses and one house property. From business one, I'm earning an income. Business two, there's a loss. House property, there's a loss. Now, what should I first do? Should I first adjust this income of 2 lakh rupees from the loss of house property? Or should I first adjust this 2 lakh rupees, this profit of 2 lakh rupees from loss from business? What should I do first? I need to set off. I don't want to pay taxes on 2 lakh rupees because I'm running losses under two of other sources of income which I have. So I don't want to do that. Okay. I want to set off. I want to set off my income from losses. So guys, if you set off the income within the same head, let me use the terminology first. If you set off income within the same head, so head of income is PGBP and you have two sources of income. If you set off income within the same head, that is known as intra-head adjustment. That is known as intra-head adjustment. Intra means within. Intra means within. Guys, you must remember, you must be having in your school time intra-school competition and inter-school competition, right? Within the school, when competition happens, it is known as intra-school competition. My school had 4 houses: Sapru, Tagore, Tilak, Kabir. Okay, 4 houses were there, and 4 houses used to compete with each other. All the students were divided amongst these 4 houses. This is known as intra-school competition. But when our students from our school used to compete with other schools, that is known as inter-school competition. Similarly, guys, what is intra-head adjustment? Intra-head adjustment is when adjustment happens within the same head. When adjustment happens within the same head, it is known as intra-head adjustment. But when adjustment happens beyond the heads, okay, when adjustment happens within 2 heads, that is known as inter-head adjustment. So that is the difference between inter-head adjustment and intra-head adjustment. So there are 2 kinds of adjustments. There are 2 kinds of set-offs which we will be dealing with in this particular session, guys. Inter-head adjustments and intra-head adjustments. Intra-head adjustments means adjustment which happens within the same head, and intra-head adjustment means adjustment happens beyond the same head. It happens within the different heads also. That is known as intra-head adjustment. So inter-head adjustment and intra-head adjustment. Intra-head adjustment happens within sources of income within the same head. That is intra-head adjustment. And inter-head adjustment happens within 2 different heads of income. Inter-head adjustment happens. That is the difference between inter-head adjustment and intra-head adjustment. That is the difference. Okay, sir, got it? All right, there are 2 generic notes which are written on the board, guys, and let's see what are those generic notes. So I think some of the part has been deleted on the board. So I'm just trying to bring that part back. Yes, the part is back. All right. So there are two notes which are there in this particular section, guys. Let's see what are those two notes. Notes are, number one, first intra-head set-off shall be made, then inter-head adjustment shall be made. The first and foremost requirement of adjustment is that first you will make adjustment for intra-head. First you will make adjustment for intra-head. So this adjustment will happen first, and then if something remains, so business one should be adjusted with business two first, and then if something remains, then it should be adjusted against any other head. This is intra-head adjustment. So intra-head adjustment should happen first, and then inter-head adjustment should happen. That is rule number one. Rule number two, losses which cannot be carried forward shall be set off first. Now, guys, losses come with an expiry date. Just like your medicines, your medicines come with an expiry date. So suppose you have two tablets, okay, two strips of tablets, both of the same medicine. One of them is expiring after 1 month. Other one is expiring after 3 months. Which one will you consume first? Obviously, the one which is expiring earlier. So guys, over here, losses come with an expiry. What do you mean by that? Some of the losses can be adjusted only and only up to 8 years. Some of the losses can be adjusted only and only up to 4 years. Some of the losses can be adjusted for multiple years. Now, suppose you have an option of adjusting losses. You have two losses and you have to adjust one of them. One of the losses is expiring in 4 years. Second one is expiring in 8 years. Which one will you set off first? You have a choice of opting between two losses. One of the losses expiring in 4 years. Second loss is expiring in 8 years. Which one will you choose first? Of course, guys, we will choose the 4 years ones. So the losses which are expiring first are to be set off first. Losses which cannot be carried forward, okay, losses which cannot be carried forward should be set off first, and then the remainder losses should be set off. Then set off is mandatory even in the case of clubbing of income. So set off is a mandatory exercise. You cannot say that, sir, I don't want to set off my income from losses, I want to carry forward these losses, sir, I don't want to set off. No, you cannot say that. Set off is a mandatory exercise. Whether you want it or not, you have to mandatorily get the set off done. Even when you have clubbed income, even if you have income of someone else taxed in your name, which is clubbed income, even then your set off is mandatory. You cannot avoid set off. Set off is a mandatory exercise. You have to do set off. All right. So let's see what are the nitty-gritties of set off. Let's see what are the nitty-gritties of set off. So in this chapter, we are going to deal with two things: set off of losses, and next is carry forward of unabsorbed losses. Set off of losses and carry forward of unabsorbed losses. So let's start with set off of losses. Guys, as we have already discussed, set off is divided into two parts: intra-head set off, inter-head set off. What do you mean by intra-head set off? Intra-head set off means within same head, in two sources of income, we are going to set off our income and losses. Which means I have two house properties: house property 1, house property 2. House property 1 is yielding a loss, house property 2 is yielding a profit. I will first set off house property 1 loss with house property 2 profit. This is known as intra-head adjustment. When within the same head of income, you are adjusting profits and losses, these are known as intra-head adjustments. So intra-head adjustments are allowed, completely allowed. There's no restriction, there's no embargo on intra-head adjustments. However, there are certain exceptions whereby intra-head adjustment is not possible. So guys, barring these exceptions, intra-head set-off is fully permissible. Barring these exceptions, intra-head set-off is fully permissible. All right, so let's see the exceptions where intra-head set-off is not permissible. So, cases where house property 1 income cannot be set off from house property 2 income, a loss. PGP 1 income is not permitted to be set off against PGPP 2 loss. There are certain situations. So these are the exceptions. Other than these exceptions, all intra-head adjustments are permissible. You can set off one source loss with other source income at any given point in time. That is absolutely allowed. It is not a problem at all, except for these cases. Now, what are these cases? Let's read one by one. Number one, long-term capital loss. This is long-term capital loss. So what do you mean by long-term capital loss? So guys, if you are having some capital asset transfer, what do you mean by capital loss? Capital loss means where capital asset is being transferred from one person to another person. If you have a capital loss, which means your long-term capital asset has been transferred at a loss, so your sales consideration is less and your cost of acquisition is more. In that circumstance, you will result into a loss. It will be a capital loss. So guys, long-term capital loss cannot be adjusted against short-term capital gain. So intra-head adjustment is not possible in this particular case. Intra-head adjustment is not possible in this particular case. Long-term capital loss cannot be adjusted against short-term capital gain. So why is it so? Guys, because long-term capital loss is taxable at a beneficial tax rate, at a lower tax rate than the short-term capital gain. Barring a few cases like equity shares where STT is paid. I'm not talking about those exceptional cases, but as a general rule, long-term capital gain is taxable at a lower rate. Short-term capital gain is taxable at a higher rate. So if there is long-term capital loss, we will allow it to be adjusted against long-term capital gain only. We will not allow you to adjust long-term capital loss with short-term capital gain. Long-term capital loss can be adjusted only and only against long-term capital gain. Simple logic. Logic is very clear. Long-term capital gain taxable at a lower rate. Short-term capital gain taxable at a higher rate. So we will not allow you to adjust the income which is taxable at a lower rate. This is the income which is taxable at a lower rate. If it yields a loss, we will not allow you to adjust it with another source which is taxable at a higher rate. So long-term capital loss cannot be adjusted against short-term capital gain. Number two, loss from speculation business. Now, first of all, what do you mean by speculation business? Guys, speculation business means a business of probability, a business of chance. That is known as speculation business. I'll give you a simple example. I invest in shares of Reliance Industries Limited. I purchase the shares and keep it in my kitty for 7 years, 8 years, or 10 years, right? Because I am hoping that I'm going to gain some big benefit out of those shares. This is not a speculation business. This is not a speculation business. Now I'll come on to the speculation business. I purchase shares of Reliance Industries Limited worth 10 lakh rupees. I purchase those shares. I don't have the money. I don't have 10 lakh rupees. But as you are aware that the settlement is to be done, the payment is to be done at the end of the day. So during the day, when I purchase 10 lakh rupees worth of shares of Reliance Industries Limited, during the day, I even sell all of them. Thereby, I need not pay 10 lakh rupees to stock exchange. I need to pay only the differential between the purchase price and the selling price. This is known as speculation. In Hindi, it's known as satta. Satta, gambling. It is a speculation business where risk content is really high. It's a very, very risky business. And there's a very peculiar type of business, which is speculation business. So if you're into speculation business, speculation loss cannot be set off against any other business income. Within the same head, we are currently talking about the intra-head adjustment, right? So we are talking about the exceptions to intra-head adjustment. So within the same head, PGBP, you cannot adjust loss from speculation business with profit from any other business. You just cannot adjust it. You cannot set it off. Next, loss from section 35 AD business. Now, this is a very peculiar business, guys. You remember the 13 or 14 cases where we had some specified businesses for which capital expenditure was also allowed as a deduction. Such a huge benefit was given to those 13, 14 businesses. What were those 13, 14 businesses? Guys, beekeeping, slurry pipeline, hotel, etc., etc., etc. Cold storage, infrastructure business, etc., etc. So those 13, 14 businesses where huge benefit was given to the assessee, capital expenditure was allowed as a deduction in year one from profit and loss account. Huge benefit was given to the assessee under section 35 AD. Now, if huge benefit is given under that section, then any loss which is incurred under that particular business, that should not be allowed to be set off against income from any other normal business. So loss from section 35 AD business can be adjusted or can be set off only against income from 35 AD business and not from any other business. We're talking about intra-head adjustment, right? So I'll give you an example. Okay. A, B, C Limited has two businesses, 35 AD business and other business. 35 AD business has incurred a loss of 10 lakh rupees. Other business had incurred a profit of 5 lakh rupees. 35 AD business has a loss of 10 lakh rupees. We are talking about intra-head, right? Intra-head. This is also business. This is also business. Both are PGBP. We are talking about intra-head. We have not touched intra-head as of now. Okay. So loss of 35 AD, income of other business. Question is, can it be set off? Answer is no, cannot be set off, because this is a highly beneficial provision. There are huge benefits which are accruing in this particular section to the assessee. So the profits are subject to special deductions. Therefore, losses shall not be allowed to be set off against any other business. Losses cannot be allowed to be set off against any other business in this particular case. So ABC Limited, 35 AD, there's a loss. Other business, there is a profit. Adjustment not possible. Adjustment not possible. But sir, if I have two 35 AD businesses, if I have two 35 AD businesses, so I'm also running a hotel, I am also into business of slurry pipeline. I have two 35 AD businesses, and the second 35 AD businesses is yielding a profit of 7 lakhs. Now the question is, can I set off this 10 lakh from 7 lakh as an intra-head adjustment? Answer is yes, this set off is possible. 10 lakh adjusted with 7 lakh, possible. 10 lakh adjusted with 5 lakhs, not possible. So that is the difference between a normal business and the business of 35 AD. So 35 AD business is not adjustable against any other business. Loss from 35 AD is not adjustable against income from any other business. Then loss from owning and maintaining race horses. Now guys, this is also a very peculiar nature of an activity. This economic activity is a very peculiar nature economic activity. Okay, fantastic. So Sayali Bhedi is also with us. Chulbuli Kudi, one of my favorite channels to watch, guys. Her vlogs are really cool. So Chulbuli Kudi is also seeing our live session as of now. And yes, welcome. Yes, the students are also excited. Kirti Batra knows about Chulbuli Kudi. So guys, one of the most hilarious and one of the most interesting channels which I usually watch, vlogs of Chulbuli Kudi. If you get time, do visit her channel. I am a fan of that channel, and I'm sure you will also be a fan of that channel, because she brings up such new content. And the last video where she had forced her friends to eat toothpaste. Yes, she forced her friends to eat toothpaste, Colgate toothpaste. That was really hilarious. But yes, it was a little dangerous and worrisome also, because once you meet her, and what if she makes you eat toothpaste? That is a point of contention. You need to be very careful in that respect. But yes, otherwise her channel is really amazing. Welcome Chulbuli Kudi in our session. All right, so we move on to our next head: loss from owning and maintaining race horses. Loss from owning and maintaining race horses. If you are owning and maintaining race horses, and if you are incurring loss from owning and maintaining race horses, then guys, this cannot be set off against any other head of income. This cannot be set off against any other source of income, because race horses is a very peculiar nature of business. It is a very peculiar nature. So this nature of business, this peculiar nature is to be, the loss should be set off from profit of this particular activity only. So owning and maintaining race horses, losses shall be set off against profit from owning and maintaining race horses itself. That is how this set off restriction is there. So we are talking about intra-head adjustment, and I'm saying that apart from these adjustments, all other intra-head adjustments are very much possible. Next exception is loss from a source exempt under section 10. Now this is a very important point, guys. There are certain incomes which are exempt from tax. There are certain incomes which are exempt from tax, and incomes which are exempt from tax under section 10, those incomes have no taxability. Obviously, taxability will not arise in those incomes. Now, the question is, if taxability will not arise from those source of income, then if there is a loss from that particular source, should it be adjusted against income from other sources? Answer is no. When that particular source is not taxable, you're not paying taxes on the income, then why would losses be reducing your taxes? Your losses should be immune to taxes as well. Because if income would have been earned from that particular source, then it would have been tax free. So losses should also be tax free. Losses should also be tax free. Losses should not reduce my taxes. If income is not increasing my taxes, losses should not reduce my taxes. A fair and justified principle. So in case you have a loss from any source which is exempt under section 10, for example, agriculture income, if you are earning agriculture income and you are earning income from that agriculture income, guys, that will be taxable. Agriculture income will be taxable. So agriculture income which is taxable, that agriculture income, if yields a loss, then that loss will not be adjusted, because agriculture income which is taxable is actually not taxable. Agriculture income is exempt from tax. So if agriculture activity is yielding a loss to you, that will not be allowed to be set off against any other source of income. So loss from a source exempt under section 10 is not allowed as an intra-head adjustment. The next one is loss from lotteries, crossword puzzles, race, card game, gambling, etc. So if you have income, if you have losses from any of these sources, guys, these define the casual income, right? Income from other sources, we had studied these income. These income are defined by the casual income. So these casual income are earned. These casual income will be the losses from these casual income will not be allowed to be set off against income from any other source of income. The losses from these will not be allowed to be set off against any other source of income. Now the question is, gain is also not adjustable against any other loss. Now for them, for these two categories, if they yield a gain, then the gain is also not allowed to be set off against any other source of loss. Vice versa is also true. So the gain is also not allowed to be adjusted against any other source of loss. So for these particular two scenarios, these are very, very peculiar cases. The losses are also not allowed to be set off, and the gains are also not allowed to be set off against any other source. That is the principle. Okay, so these are the exceptions to the intra-head adjustment. And now we move on to the inter-head adjustment, which is very, very important. Inter-head adjustment. How would one head of loss can be set off against other head of income? So that is known as inter-head adjustment. So inter-head adjustment we'll be discussing in the next slide, and then we'll be moving on to carry forward and set off of unabsorbed losses. Okay, guys, in this particular chart, this is a very, very important chart which I've created for you to understand and remember the entire concept of inter-head adjustment. This chart contains the entire concept of inter-head adjustment, and if you just remember this chart, your entire principles, concepts of inter-head adjustment will be absolutely crystal clear. Okay, so now we talk about inter-head adjustment, section 71. What do you mean by inter-head adjustment? Inter-head adjustment means when one head of income loss is setting off, is getting adjusted from other income of a different head. So for example, you have salary income and you want to adjust it against house property loss, or you have capital gain income and you would want to adjust it against PGBP loss. So now we are talking about inter-head adjustment, right? Inter-school competitions which used to happen, right? Always remember inter and intra. Intra-school means within the school. Inter-school means outside the school. That is the way to remember them. So inter-head adjustment. So guys, how is this chart prepared? Please understand. On this axis, I have plotted all the losses. On the x-axis, I have plotted all the losses. And on the y-axis, I have plotted all the gains. On the x-axis, I have plotted all the losses. On the y-axis, I have plotted all the gains. Now, one by one, we'll take loss of a particular head and see if that can be adjusted against any other head of income. So, for example, loss from salary cannot be adjusted against any other head of income because there is not a possibility that salary income will yield a loss. In case of salary, deductions can never be higher than the income. In case of salary, Deductions can never be higher than the income. So in case of salary, loss cannot arise. So adjustment of that loss is not possible. It's not out. It's out of question. There's no question of setting off those loss. So in case of salary, loss is not there. Hence, not applicable. Not applicable. Not applicable. Adjustment with these gains is not applicable since salary cannot yield a loss. That is the first principle. Principle number 2, house property loss. Principle number 2, house property loss. There is a loss from house property. If there is a loss from house property, can that loss be adjusted against gains of any other head? That is the question under consideration. Loss from house property, can it be adjusted against gain from any other head? That is the question under consideration. Now I've divided this house property loss into two parts. House property loss more than 2 lakhs, house property loss less than 2 lakhs. So guys, if house property loss is less than 2 lakhs, then it can be adjusted against any other head of income. If the house property loss is less than 2 lakh, it can be adjusted against any other head. But if the house property loss is more than 2 lakh rupees, then it can be adjusted only against gain from house property and no other head. That is the principle. So house property loss can be adjusted against other heads only to the extent of 2 lakh rupees. That is the upper limit till which house property loss can be adjusted against gain of any other head. Let's move on to capital loss. What if we have a capital loss, which means we have sold an asset, a capital asset, and that has yielded a loss to us. Now that loss can be of two types: short-term loss and long-term capital loss. Short-term capital loss and long-term capital loss. Guys, the principle is very clear. Capital loss cannot be adjusted against any other head of income. Capital loss cannot be adjusted against any other head of income except for capital gains. Please understand the terminology. Please understand the shortcut marks which are given over here. Capital loss cannot be adjusted against any other head apart from capital gains. Guys, this is the capital gain, and capital loss can be adjusted only against capital gains. With one exception. Exception is that long-term capital loss cannot be adjusted against short-term capital gain. This we have discussed in our intra-head adjustment also. This is repetition of that point only, which we have just now discussed. Long-term capital loss cannot be adjusted against short-term capital gain. What is the reason? Reason is very clear. Long-term capital gain is taxable at a lower tax rate. Short-term capital gain is taxable at a higher tax rate. So we don't want to extend further benefit of adjusting long-term capital loss with short-term capital gain. We cannot adjust that. We cannot give you further benefit. This will be too much of a benefit to grant to. So long-term capital loss cannot be adjusted against short-term capital gain. Otherwise, within the capital gain scenario, within the capital gain head, everything else is possible. So capital loss cannot, cannot be adjusted against any other head, which means inter-head adjustment is not possible for capital loss. Inter-head adjustment is not possible for capital loss. That is the principle. Next one is PGBP. PGBP, again, PGBP can be split into two parts. Specified. What is specified business? The business which is specified under section 35 AD, which is having a huge benefit of deductions. Deductions are allowed from that particular in that particular section. If you are into those specified businesses, businesses are like cold storage chain, slurry pipeline. You are into beehiving. You are into infrastructure. You are into hotels, right? 3-star hotels. Then you are categorized as specified businesses, which are given in section 35 AD. So if you have a loss from specified business, it can be adjusted only with the income of specified business and from no other head. No other head. Loss from specified business can be adjusted only against the specified business and from no other head. And loss from any other business can be adjusted against any other head except for salary. With salary, you cannot adjust business loss. With salary, you cannot adjust business loss. With salary income, you cannot adjust business loss. But yes, salary income, house property can be adjusted. Other sources can be adjusted from salary income. From salary income, house property can be adjusted. Other sources can be adjusted. Business loss cannot be adjusted against salary income. Last but not all the least, income from loss from other sources. So how can there be loss from other sources? Guys, in some of the other sources income, there's allowance of deduction. Deductions are allowed. So sometimes deductions can be higher than the income. And at that point in time, there can be a loss from income from other sources. There can be a loss. So income from other sources, when it yields a loss, then can it be adjusted against any other head? Yes, it can be adjusted against any other head. It can be adjusted against any other head. So income from other sources can be adjusted against loss from other sources can be adjusted against income from any other source. So this is freely permissible. Some exceptions are also there over here. Some exceptions are also there, like in case of casual income, in case of casual income, in case of some other specified other sources, there are certain exceptions which, although I have not written over here, please go to your study mat and do those exceptions quite well, because they are important. So yes, as a general principle, loss from other sources can be adjusted against any of the heads. It is freely permissible. The adjustment is freely permissible. Okay, sir, got it. So guys, this was inter-head adjustment. We have covered two aspects: intra-head adjustment and inter-head adjustment. This is set off of losses from income. How can losses be set off from income? That is the yes, Arjun, I will share the answers of income from other sources test in the WhatsApp group. Guys, I know I have to share three things with you in the WhatsApp group. Number one, test of income from other sources. Number two, clubbing PDF. Number three, set of PDF. So these three things will be shared to you in the WhatsApp group by today or tomorrow. That's my promise. Okay, now we move on to a very, very peculiar, a very, very interesting concept, which is carry forward of losses. Yes, let's move on to the next topic. Carry forward of losses. But sir, what is written beyond it? And why is it written? It says carry forward and set off of losses. Sir, we have just now completed set off, okay? We have just now completed set off. Then why are we studying set off again? This is not fair. We have already studied set off. Why are we studying set off again? This topic should have been only carry forward of losses and not set off. Why are we studying set off again? That is the question. Why are we studying set off again? Guys, relax, relax. Take a deep breath. Take a deep breath. Cool your temper. Don't be angry. I know you are too frustrated because of your examination, because of the vast syllabus. You are too annoyed. You're too frustrated. And if you are in the northern part of the country, then it's too humid and too warm also. It's too, taxing on your body also. I know that, but relax. There is a big, big, big difference between the set off which we had studied earlier and the set off which we are going to study now. There is a big, big, big difference between these two set offs. These are two absolutely different set offs, and they have absolutely different terms of taxability. I'll tell you how. Okay. First, let me tell you something about carry forward. What do you mean by carry forward? Let's discuss about carry forward. Carry forward means to bring in the subsequent period. That is in the meaning of carry forward, to bring to the subsequent period. That is the meaning of carry forward. I'll give you an example. Suppose I had business loss of 10 lakh rupees. I had business loss of 10 lakh rupees. I had capital gain of 7 lakh rupees. I had business loss of 10 lakh rupees. I had capital gain of 7 lakh rupees in the current year. After setting it off, I obviously want to set it off. Please see if it is permissible. Please see if it is permissible. Yes, please see in this table if it is permissible. Loss of non-specified business. Can it be set off against capital gain? yes, it can be set off against capital gain, both short term and long term. So I am adjusting this business loss, my business loss, from capital gain. I'm adjusting it. It is permissible. Okay, after I set off my business loss from capital gain, I am remaining with 3 lakh rupees of loss. I have this 3 lakh rupees of loss. Of course, in the current year, I need not pay any taxes because I'm carrying a loss. The net loss is there in my GTI. Gross total income is a negative figure. Therefore, there's a loss. In the current year, I'm not going to pay any taxes on this 3 lakh rupees. Now, sir, this is a loss. Now, I have no other income in the current year. Is it waste? Or can I be allowed to carry it forward in the subsequent year? Answer is yes, you can carry forward it to the subsequent year. Now, talking about year 2, this is year 2, this was year 1. Talking about year 2, I have business profit of 5 lakh rupees and I have no capital gain. I only have business profit of 5 lakh rupees. Should I pay taxes on 5 lakh rupees, or should I first adjust this 3 lakh rupees from 5 lakh rupees to yield a net income of 2 lakh rupees and then I pay taxes on this 2 lakh rupees? The rule says, please carry forward your unabsorbed losses. Please carry forward your balance losses to the subsequent year, and you can set off your losses in the subsequent period incomes as well. So, this arrow which I have made, this arrow is carry forward of losses. This arrow is termed as carry forward of losses. When you carry forward your existing year's losses to the subsequent year, that is known as carry forward of losses. So this carry forward from current year to the next year is known as carry forward of losses. So this carry forward is actually the subject matter of our consideration today. This carry forward word means to take the unabsorbed losses to the next year and getting it set off in the next year. So, sir, now please tell us, why are we being so candid about set off? Why are we reading set off again? Guys, this set off means subsequent year set off. This set off means subsequent year set off. So, please note, there are two kinds of set off which are there over here. Number one, set off which happens within the same year. This is the set off which we have already studied. And second one is set off which happens in the subsequent year, which is carry forward and set off. So there are two set offs which we are going to study in this particular chapter. First is the initial set off. Initial set off means the set off which happens in year 1. That is the initial set off. And second is the subsequent set off, which means after carrying forward the loss from the current year to the next year, after carrying forward the loss from the current year to the next year, when we set off in the next year, that is known as subsequent set off. And yes, the rules of both of them are little different. Sir, we are so much puzzled. We are so much in agony. We are so much in pain. How many set offs are we going to study? Set off means set off. And are we going to study 2 rules of set off? Yes, you need to study 2 rules of set off. That is the requirement. So, guys, I hope this makes a lot of sense to you. Carry forward and set off of losses. This set off means set off after getting carry forward of losses. That is known as set off. This set off means after carry forward, when we adjust the loss, that is known as carry forward and set off of losses. So this set off is subsequent set off. Subsequent set off means after carrying it forward to the next year, when we set off our losses from the next year's profit. Please note, when we set off our losses from the next year's profit, that is this set off. When we set off our losses from the current year's profit, that is the set off which we have studied in our earlier slides. That is the difference. So now let's start carry forward and set off of losses. So first of all, we are going to study within the same head whether carry forward and set off of losses is permissible within the same head. Yes, guys, within the same head, carry forward and set off of losses is permissible. We can carry forward house property loss of the current year to the next year, and next year's house property income will be set off against next year's house property loss, current year's house property loss. It can be set off. Okay, so house property loss can be carried forward for a period of 8 years, and subsequently it can be adjusted only with the house property income. Guys, please tell me one very important thing. Okay, please tell me one very important thing. Please see this table. I'm coming onto this table back. Please see this table. Your 100% focus and attention is required, because now I'm going to deal with a very, very critical section. Okay, your 100% focus is expected and required. Please ask your mom to lower the radio or the grinder mixture which she is cooking food, to lower every noise in your house, because now I'm going to put forth a very, very important point. House property loss of current year could have been set off from income of current year of any other head. House property loss of current year could have been set off against income from any other head of the current year. But house property loss of past year, house property loss of past year which is carried forward in the current year, can only be adjusted against income from house property. That's it. No other income can be adjusted against house property loss which is carried forward. So if you adjust house property loss of the current year, then you have plethora of incomes to choose from. PGBP, income from other sources, capital gains, etc., etc. If you have house property loss of the current year, you can set off against plethora of incomes. But if you have house property loss which is carried forward from the previous year, then you have only one head of income from which you can set it off, which is house property itself. You cannot set off the carried forward house property loss from current year's business income. No, you cannot do that. 8 years is allowed to you for carrying forward this loss, and belated return, even if you have filed a belated return, then also this loss is you'll be able to carry forward this loss in the subsequent period. Second, business loss other than speculation business. Business loss other than speculation business. If you have a business loss which is other than the speculation business loss, we are going to deal with speculation loss separately. If you have a business loss and you want to carry it forward, so when you carry it forward, it can be adjusted only against business loss. Okay, it can be carried forward till 8 years, and belated return is also okay. If you file a belated return, which means you file a delayed return, then also the loss is allowed to be carried forward. Guys, in some cases, I will not allow you to carry forward your loss if you are filing a belated return. I will not allow it. I will allow it only in a specific circumstances. So business loss other than speculation loss, this can be carried forward till 8 years. And even if you filed a belated return, then also this loss can be carried forward. Okay, it's perfectly fine. Now, I'll again show you the contrast. Please see. Business loss of the current year can be set off against any other head of income. Business loss of the current year can be set off against any other head of income. But business loss of the previous year cannot be set off against any other head of income. It can be set off only against business income. That is the difference. This is the original set off, and the set off which we are currently dealing with is subsequent set off. That is the difference. Yes, sir, got it. Next is speculation loss or owning and maintaining race horses. So if you are into business of speculation, I've already discussed the definition of speculation in the earlier part of this lecture. If you are into speculation business or you are into owning and maintaining race horses, then guys, if you are earning loss from that particular source, then that can be carried forward only till 4 years. It can be adjusted only against income of speculation loss and owning and maintaining race horses. Till 4 years, it can be carried forward. And if you file belated return of the year of loss, in the year in which you have incurred loss, if you file a belated return, then we will not allow you to carry forward this loss. This loss gets wasted. You will not be provided any benefit of this particular loss. You have to file return in a timely manner. If you want to gain benefit of this loss. Okay, if you want to carry forward this loss, you have to file return in a timely manner. Next one is business loss from 35 AD business. If you are running a 35 AD business, and I've already discussed the 35 AD business, though 13, 14 businesses which have been specified under section 35 AD. If you are running business losses from that 35 AD business, then guys, you will be able to carry forward and adjust it only with income of 35 AD business. The beauty and the best part of this particular loss is you will be able to carry it forward unlimited period of time. So guys, the expiry date of these losses are 8 years, 8 years, 4 years. Over here, the expiry date is unlimited years. You can carry forward this loss to unlimited years. In subsequent period, whenever you'll have any gain from section 35 AD, you can set off this loss from that particular gain, right? But the moot point of consideration is all these losses can be set off only against these incomes only, not under any other head. From these heads only, from these sources of income only, the losses can be set off if they are carried forward and set off, not the original set off. Original set off rules are different. Carry forward and set off rules are different. Both are different rules. Okay, sir. Then capital loss, if you are having any capital loss from sale of capital asset, then that is carry forward. You can carry forward till 8 years. Belated return is not okay. If you file a belated return, then you will not be allowed to carry forward your capital loss. Your capital loss will go for a waste if you file a belated return in the year when you have incurred losses. So in the year when you have incurred losses, you have to file return very much on time. On time, the return is required to be filed. Okay, sir. Got it. All right, one very important thing over here also, guys, even when you are having a carry forward capital loss, then long-term capital loss can be set off only against long-term capital gain. Long-term capital loss cannot be set off against short-term capital gain. That rule still applies even when you carry forward and set off long-term capital loss. Okay, so that rule still applies, still holds good. Now, so are there any situation where I'm able to adjust my loss with any other head apart from the head in which the loss is incurred? Yes, guys, there's one situation outside same head. Okay, so in this particular case, you will be able to set off your brought forward loss from any other head. Okay, outside the same head. This was within the same head. This was within the same head. So the example is, if you have unabsorbed depreciation, this is the most beneficial loss which any businessman can own. The most beneficial loss which any businessman can own. Unabsorbed depreciation can never go for a waste. Okay, unabsorbed depreciation is carried forward. You can carry it forward for unlimited years. Unabsorbed depreciation you can adjust from any other source of income, any other head of income. It is freely adjustable against any other head of income. Unabsorbed depreciation is adjustable against any other head of income. Beauty of this section, beauty of this provision. It can be carried forward for unlimited years. It doesn't get expired any which ways, except for salary and winning from lotteries and crossword puzzles. So the adjustment cannot happen from salary and winning from lotteries. These are the two exceptions which are there. Apart from these two exceptions, the unabsorbed depreciation can be set off against any other head of income, freely adjustable against any other head of income. That is the best part about unabsorbed depreciation. It's a very, very critical loss. It is a very, very critical carry forwarded loss, which is very, very useful for any businessman or for any person, because it is adjustable against any other source of income, first of all. Number two, it can be carried forward for unlimited years. Yes, the set off cannot happen against salary and winning from lotteries or crossword puzzles. These are the two restrictions. Apart from these two restrictions, there's no other restriction in unabsorbed depreciation. That is the best part about unabsorbed depreciation. And yes, unabsorbed depreciation is by far one of the most important brought forward losses, carried forward losses, which are there in your syllabus. So yes, guys, that's all for this particular chapter, carry forward and set off of losses. In brief, I've been able to explain you the entire concept of carry forward and set off of losses. Now it's your responsibility to carry on the questions. Before we leave the session, please hit a like button so that I'm motivated to actually continue these sessions. Please hit a like button, and yes, do share these videos with all your friends. All the people who are doing CMA Intermediate. I'm very sure that even if you revise through these videos at the end hour, at the nth hour, at the end day, if you revise these concepts and these videos, and these PDFs are provided to all of you, whether you are taking coaching from me or not, it doesn't matter. These PDFs are provided to all of you. If you just go through these PDFs just before the examination, then guys, you definitely will be able to remember the concepts very well. You'll be able to recall the concepts very well, and you'll be able to perform superbly well in your examination. Yes, this Sunday, we are going to have a test. We are having test of 2 chapters this Sunday. 2 chapters are clubbing and carry forward and set off. Sunday, date is 22nd of May 22nd of May, we have test of 2 chapters. What are those two chapters? Clubbing and set off and carry forward. Guys, we'll have a live session on Thursday as well. And over there, if I'm able to complete one small chapter, then I will add on that chapter also in your test of Sunday. So then you have test of 3 chapters on Sunday. As of now, you have test of 2 chapters on Sunday, clubbing, set off, and carry forward. Okay. So yes, we'll be meeting in our subsequent sessions with more such summary videos, revision videos, marathon videos. And yes, all the chapters of CMA will be covered in these marathon videos of direct taxation. And yes, before examination June 2022, we are determined, we are focused to really, really master this subject called direct taxation and attain 80 plus marks in direct taxation. So yes, till we meet again, please hit a like button on this video. Let's target maximum likes on this video. And yes, we'll be meeting in our next session. We'll be meeting in our subsequent sessions. And sir, mostly you cover 99.99% in this 1 hour lecture of carry forward set off. Then we studied in 7-8 lectures. Yes, Dhruv, absolutely. This is the purpose of these marathon videos, that I need to cover maximum in less amount of time. That is the aim of these marathon lectures, and that is why these lectures are there. And that is the use of this chapter, that at the end moment you will be able to recall everything very, very well. So guys, at the end moment, when you have very less time, then you need not study all the chapters. Okay, you just study the top 8 chapters well, and for rest of the 12 study notes, you should just refer to these marathon videos or these charts. That will be more than sufficient. That is the idea of creating this repository, this knowledge repository of direct taxation, all the chapters. So yes, we'll be meeting in our subsequent sessions. Till that time, all the very best and happy studying. Bye bye. See you in the next live session and the test series.